Yo, what is good? We're back with another video. Today we're going to be looking at how to find a draw on liquidity, right? Because with ICT concepts, most people can't understand how to find the draw on liquidity. They can't tell if we're going to be coming to this low, this high, this imbalance, because we know that price moves from external liquidity, internal liquidity, and back again. So it moves from imbalance to highs and lows. And we're going to be looking at how we can identify to find the draw. So we're just going to go in replay mode and we're just going to do it live. So we're going to go to about 6 in the morning on June 20 or June 12th. So let's take a look. On the daily chart, we are clearly reaching higher. We have all these triple equal lows here. Oh, these are what we want to be targeting now because it looks like we're going to be drawing towards them. And then we have this high over here as well as this imbalance. So it looks like we are going to be targeting these areas. So we have this daily imbalance and we just swept these daily equal highs here. So after sweeping these equal highs, we want to see what price does. Are we going to displace above this high, or are we going to start rolling over? So if we head down to the 4 hour, we swept this high here, right? But we haven't swept internal yet, right? We have all these equal lows down here, and we have not swept internal yet. So we have this high here, and we just completely disrespected this fair value gap. So therefore, it is telling me that price is probably going to want to draw to this high, right? This is that daily fair value gap, daily. So we are just completely disrespecting this fair value gap. We have reclaimed this fair value gap, right? Price moves off of imbalances and highs and lows. So if we are disrespecting this bearish 4 hour fair value gap, it is telling me we are going to probably come to this high. So if we head down to the 1 hour, what's happening down here, right? So here's that 4 hour fair value gap right here. We disrespected it. We are holding this fair value gap. So let's get rid of the 4 hours, since now we are coming down on time zones or time frames and seeing that we are holding discounted PD arrays, right? So if we head to premium discount, we have not yet reached discount of the range yet, but from the real range, we have came down into discount right here, and we know that bigger moves happen at discount of the IPDA dealing range for the day. So whenever we are in this range and we're sitting right here at discount, right, we are holding this fair value gap right here. Okay, so we're holding that, and then we are holding this fair value gap that is in discount. So what can we expect? We test and we rip higher, just sweeping this high. But we are expecting price to come to this high. Why? Because now we are holding bullish PD arrays. We're holding bullish fair value gaps and disrespecting bearish fair value gaps, right? As we can see right here, holding this, which is in a discount of the range, holding that 1 hour fair value gap, which is in the discount of the range. So we head down to the 15 minute. Now that we're on the 15 minute, we can get rid of these because we are holding this hourly fair value gap. Okay, so now that we're on the 15 minute, we can see that we just swept a high, which is in a bearish fair value gap. So now what can we expect? If price is going to run through this fair value gap, we are going to go to this high, this external level. So now let's play. What time is it? 5:45 in the morning. Let's play it till about 8:30. 8:30. Right there is 8:30. So if we put on these boxes, why can't I see them? Oh, hold on. Let me display, I don't know, 180 days. Oops, my bad. No, 170 days, sure. So can I get the boxes on? I don't want to refresh the page, but let's see. 1800, if we get out the vertical line, 1800 is right here. 3 a.m. right there. So, right, that is London. Yeah, London. Okay, so right here is London. We have not swept Asia lows yet, and that is at a discount of the range with that hourly fair value gap. So right now we want to see, are we going to disrespect this, or are we going to hold, or are we going to go right through it to this high? Right, we don't have a setup yet. We're on the 15-minute chart. We don't have a setup. So respecting it so far. Right, let's just get this off. We know that we're in that higher time frame fair value, bearish fair value gap. We're in that 15-minute fair value gap from over here, just now sweeping internal liquidity. So now we're holding it. So what can we expect? This low, because we are respecting this bearish fair value gap that's in a premium. So now we have equal lows, still respecting this, still respecting it. Right now we get that low swept, or now we go down to the lower time frame. Are we going to displace through this low? As we see, the bodies are holding it, and we are not getting that displacement lower. So now we look for an internal shift. I can't go down in lower time frames because the 1 minute only can go so far. Okay, so now it looks, there we go. So now we're getting displacement higher. Can I go to the 2 minute? No. 3? No. Where was I? June 20 something. Let's just go to the hourly. Okay, we're right here. So let's go back to about 9 in the morning, 15 minute. Okay, it's perfect. Okay, so here we get that displacement higher. Now we have this 5 minute fair value gap. What can we expect now? We can at least expect this high. We can at least expect that. Yes. Can I go to the 3 minute? No, I can't. Can't go any lower. So there we take out that high. I'm guessing there was an internal like 3, 2, or 1 minute model that we could have taken, but I can't go down. But as you see, we just draw straight to that high as well as this high. So now we look for, okay, are we going to displace higher and target this buy side up here? So far, no. What are we disrespecting? What are we respecting? Right, this is that 15-minute fair value gap that we closed above, but now that we swept buy side, we're not interested in taking any trades yet. We want to see how we react here. So far, we're holding, right? Okay, so now what can we expect? This high. There we go. This high's taken out. But I can't go down lower time frames, so I can't really buy or anything. But this could have been a buy. As you see, we come down, discount of the range, hold a bullish PD array, which happens to be an order block, fair value gap. Right, you can use this order block because that's a lot cleaner because it's an order block within a fair value gap. Right, whenever we are in a bull, we want to be targeting higher prices. We want to see bearish candles holding price. So we come down of the dealing range into a discount, holding a bullish PD array, and you probably, can I go down? Why can't I go down? It's so annoying. But as you see, after we hold this, displacement up, target the previous high. This is all it is. Now we are getting displacement above the high. So what can we expect? We probably come up to this external level. And it's 11:45. So yeah, we probably reach it in this day, right? Here's a bullish fair value gap. What are we going to do here? Right? What do we have on a 15-minute bullish fair value gap? Is it? Yeah, I mean, every pullback whenever we are going higher can just be assumed as a discount PD array to drive us further. So now we see, okay, are we going to take, there we go. We take out that high. That was a daily high, right? Yep, that was a day, wait. Yeah, that was a daily, wait. Yeah, that was a daily high right here, my bad. So now we want to see, okay, look, we are displacing above all these highs. So what can we expect? We can probably expect the draw to become this daily fair value gap. So with this high here. So let's clear all the drawings. Let's mark out this high, because as we are displacing above all those relative equal highs, we can assume the draw is now this daily fair value gap. It's probably a weekly as well. Yeah, I mean right here, but oh look, we have these relative equal highs here. So bang. Yeah, it is a weekly. Okay, so this weekly fair value gap right there. Let's go down to the daily. Yeah. Okay, there we go. So it is a weekly fair value gap, and it looks like obviously we are drawing to it. So now we want to be targeting this high up here, which is in that daily fair value gap. So right there. Why? Because we are respecting bullish PD arrays, and now we are getting displacement above all these highs right here. So if we're displacing above all these highs, you can safely assume the draw on a higher time frame will be here. And then we go down to the 4 hour. Right, so I doubt that we reach it on this day. Yeah, I mean, we're 170 points away. Do we? No. Okay, cool. Oh, wait. Let's go back to 6 a.m. Okay, here we go. Now, let's take a look. We have all these imbalances right here. What time is it? It's about midnight, so let's go a little further. It's 8 a.m., 9 a.m. Let's pull it back right here. So 8 a.m. What can we expect? We can see if price wants to come down to equilibrium of the range. So honestly, I would be more interested in this fair value gap if we want to retrace. Right? So this would be the only discounted PD array that I would be interested in. Right? We also, no, that's not a breaker. So yeah, this would be the only thing that I'd be interested on the hourly. And if we head to the 4 hour, you always have to be looking left no matter how far it is, because we always want to see where price is drawing to. We have that fair value gap, but I would not be interested in that. I'd want to see this high. So that's pretty much all I see here. So let's go down to the 15-minute. Right, we just created a fair value gap. This looks like news. This looks like a news candle. So let's see what we do here. So we disrespect this fair value gap right here. So what can we expect? At least to come to this low. At least to go to that low, because we just disrespected that. And there we take out that low. Now we want to see what happens. Now we have a bearish fair value gap, which is smaller, so I'd be more interested to see what happens there. Would not care about this inverse as much. So let's see what we do now. Now we're in that bearish fair value gap. We run right through it. So now we go down to the smaller time frame. It's about 11, and we created a bullish fair value gap within that bearish 15-minute. So we want to see, is price going to retrace right down into here? Okay, here we are. This could be a buy opportunity to target what? This high. Oh, I did not mean to do that. So still respecting that bullish fair value gap, right? The bodies tell the story. The wicks do the damage. You can see this comes down below it, but the body is clearly holding it. So we just took out this high. So now we want to see, what are we going to do? Are we going to displace above it or to target this high, or are we going to come down, maybe take out this low? So now we want to see what happens. Right? I wouldn't actually be in a trade. There we go. So as you see, you want to at least take partials at this high. Clearly, because what? 58, that's 50 points. You're gonna target this high. That doesn't make sense. So partials at this high and your runners to come to this high, because we don't know if price just wants to come to this high or if price wants to come higher, right? Because we swept an internal low. So we swept this low and we never returned to discount of the range, because discount of the range, if we're using this candle's low to this candle's high, we just miss equilibrium of the range. So technically we haven't reached equilibrium, and I will make videos going more into depth about fair value gaps, equilibrium, premium, discount, which is equilibrium of the dealing ranges, a bunch of other stuff, but I just want to get how to find the draw on liquidity out of the way, because it was pretty tough for me at first, but now it's literally just seeing what's being respected, disrespected. As you see, as we come through this fair value gap, this bearish one, we create a high, come down to respect it as an inverse, right? Yes, we do have a bullish one, and price does close below it, but this inverse is now acting as a discounted PD array. Are we in a discount of the dealing range? Maybe. I'm not sure. Yes, we come down exactly to a discount and hold this this inverse. This bearish fair value gap now turned bullish as an inverse. So as you see, price comes directly to a discount by like maybe a tick. 75, yeah, an exact tick, and that's all that price needs to do. It only needs to come below or above discount or equilibrium of the range to be classified as premium or discount. Same thing with highs. As you see, we barely drive above this high. What is it? 309.25. The high is a point and 2 ticks above this high, and that's all price needs to do to take buy and sell stops. So now that we took this high and we are getting displacement off of it, what can we expect? Probably to come down to these equal lows, right? Equal lows always get swept. These are way too clean. That's why right now on the daily chart, these triple equal lows are probably going to be getting swept in the next few days, as in it's September 24th. These triple, and what are we at? We're at 14,869 on the NASDAQ. These triple equal lows are the draw. We are coming down there. So now we want to see, okay, we took out this internal high. We were in a premium of the range. We are now disrespecting bullish PD arrays, right? So now we want to see, we probably come down to this low. What time is it? Market's about to close, so let's just, probably stays in the range. Yeah, just stays in the range. So now we go to the next day. Asia session, London session. Okay. Oh wait, let me just go to a 15-minute and play this out, because that's much quicker. Okay, so now it's 7 o'clock. 8:30? Yep, 8:30. So now what? We just took out this high. Just took out an external level on the 15-minute. Right here on the 1 hour as well. Take it out. Now what? We want to see, are we going to hold this fair value gap? If this gets disrespected, what can we expect? Probably this low. So let's go down to a 15-minute. This looks like another news candle, so it looks like we had a lot of news this week. It's also Wednesday on this day, so probably a red folder. But let's see what we do here. It's 8:30. Let's go to 9. So I'm pretty sure the hourly candle, no, the hourly candle did not close below. So now let's check it out. Whoa. Oh, that's market open. Okay, so now look. Let's go to an hourly chart. So let's see where we came down to. This wick. Did not get to consequent encroachment of it yet, but exactly where we draw to is a discount of the range. We come down to a discount of the range. Now what can we expect? If we are gonna, well, it looks like this was just a pure liquidity sweep, because we clearly just wick straight through it. So now let's take a look. We're on the 15-minute chart. We have a bearish fair value gap. This is that 1 hour fair value gap. So let's see. So price expands through it. Let's head down to the 5-minute. Now we have a bullish. Why wouldn't I? Oh wait, no, that's not even a fair value gap. I mean, it's a tiny one, but still. Can I go down to a smaller time frame yet? Nope. So now we have this inverse 15-minute right here. Let's just turn it purple. So that, wow, that's ugly. So we just swept this low. Displacement higher. What can we expect? This high. Why? Because now we are disrespecting bearish PD arrays. So let's go a little further. There we take out that high. We could have entered off this order block. Probably an internal model for sure. We also swept internal and then straight to external. Now we go straight to this high. So that's how you find the draw. I mean, I hope you guys are understanding. We'll do a couple more examples, but it's all about what we are respecting and disrespecting. So now let's take a look. Let's just clear this. Are we going to come to this high? I don't know. Depends how we act at this high, but as of right now, it looks like we will. Why? Because we took out these lows, and this wick right here is telling me, yeah, price probably wants to go higher. So we still have that external level up here. So straight through, there we go. Take out this high. Now we probably take out this high. I mean, 67. We're not going to come within 2 points of it. So let's see here. But you always want to be curious. How do we react off this fair value gap? Prices. There we go. We take out that external level. Displacement down. Disrespect to bearish fair value gap. Where do we go? Probably this high. There we go. Take out that high. Now what do we do? What are we doing on the 15-minute? Close below a bullish. I couldn't even think of the word fair value gap, but we have a fair value gap right here that's in a in a premium, right? This is in a premium of this range. So we reach a premium. Let's see what we do. Respecting. Looks like we're gonna want to come down to at least this low. Why? Because we're respecting this. Why? Is there one? I mean, there's a tiny one right there, but I wouldn't really care. There we go. We take out that low. Now what do we do? What time is it? It's about 1. So now we take out this low. And then, whoa. What was that? Was that FOMC or something? How do I go to a... Let's just go back. June 14th. Yeah, it was FOMC. So, see, even on FOMC days, the market shows you what it wants to do. I mean, clearly we wanted to go higher. Clearly, if you can just figure out what's being respected, what's disrespected, right? What's this? This is a turtle soup entry. I wish I could go down to a smaller time frame, but I can't. Right? Guess where we go? Straight into a fair value gap. Boom, discounted PD array, turtle soup entry, straight to buy side. And that was that external daily high that we were targeting. So let's do one more. Let's go down to, that's 6 a.m. Good enough. So what are we doing? CE, right? We want to be careful. Why? Because we took out that high from all the way right here. We took out that high. So now what do we do? Okay, so we have these equal lows acting as sell side. If we want to come down further, I'd be interested to see what we do at this fair value gap that's in a discount, right, of the range. Boom, boom. Let's go down to the 1 hour. right? Once you guys keep doing this, it just gets so repetitive, so much easier to see. So just disrespected this. What can we expect? This high. So we just swept that high. Do we come to this high? I don't know. Maybe. So it's 9 o'clock. Let's go down to the 15-minute. So we just took out that high. So we want to be cautious. There we go. We take out that high. Now we want to see what are we going to do from here. Okay, so higher. What are we doing on the hourly? We created a fair value gap. So what are we going to do there? Right? Oops. Well, it just looks like we're going to grind higher this day. We just go straight up. Not really. Right? What's being respected? Disrespected. We had this bullish fair value gap test. Go. Not really much else I see, to be completely honest, on this day. So there we go. There's the first disrespect of a fair value gap. No, actually it did not. It held it with that volume imbalance. It closed below. So probably lower. At least this low. We can oh wait, market's closed. But there you go. Takes out that low. Let's do one more because this day was kind of shit. Let's go, let's go, let's go. Oops. We're at 27 minutes already. Alright, so 8:30. Ooh, here we go. This is going to be a good day because now we just took... my chair. I need a new chair, man. We just took out this high. What were we respecting? Bullish PD arrays. Fair value gap holds. Fair value gap doesn't hold, but what's it matter because it's not even in a discount probably. Actually, it probably is. No, it wasn't. So we wouldn't even be interested in that fair value gap. We wouldn't take an entry there because it's not in discount. But there we go. So hourly chart. Let's just get rid of that. Just swept that level. What about the daily? The daily looks like it's reaching for these highs. Oh yeah, we do get to 6. I forgot that we actually got to 16,000. So now, what are we going to be watching? Definitely want to see what we do because we just swept this high. Don't really want to do anything yet. So it's 8:30, 1, 2. Okay, so 8:45, 9 o'clock. Okay, there's 9:15. All right, so we just swept this internal level now. Now, what the fuck? Holy shit. It's actually a massive candle. That's 124 points in 15 minutes. Alright, so now we just swept this low. So now what do we do? Are we going to want to come down to this low? I'm not sure yet. I want to see how we react off of here. Okay, so we're in it. So right now we're respecting it. So now what? Okay, so nothing to do yet. Okay, now where did we go? Equilibrium. Why wouldn't we have taken this fair value gap? It's not in a premium. This fair value gap was in a premium. So bang, that would have been the fair value gap that we were interested in. Straight into it. Also have a 5-minute breaker block. So it comes within a tick of it. Why? Some people get these so confused. We have a high, we have a low, we have a higher high, price slams through that low, retests, probably comes to this, actually not probably, I'm quite confident that we come to this low. So let's just sell, sell, sell. Fair value gap. Want to see bearish PD arrays hold. Did we turtle soup that? Yeah. Came up, sweeps this high. All right, I would have entered up here, not down here, so chill out. So there we go. There's that low. There's the low that we were targeting. Just made a quick $1.5 million. It's not a bad day. But yeah, that was, I mean, it's not, I don't even know how to like say it. It's easy to see. You can't unsee it whenever you see it. Whenever you understand it, we probably do end up coming to this low. Right? So now just came into equilibrium of this little range, right? Because we're always in a range. I would expect that low. Yeah. I mean, that was pretty easy. So that is all you do to find where the draw wants to be, right? So let's take a look at price action on what, Friday. So this right here is open. This 930 candle is open. We come straight down to this London low. We sweep this low. Okay, so now we want to wait. We just want to wait to see what price wants to do. Are we going to displace through this low, or are we going to just come below it and then displace higher? And as you see, we disrespect all these fair value gaps right here, all of them. So now what? Now we go down to a lower time frame. So after we see that all those got taken, all those fair value, I couldn't even think of what I was trying to say. All those fair value gaps got disrespected. What can we expect? Probably to come to this high, because we just swept this level. Internal. Where do we go? External. Here's an external level on a smaller time frame. Right? Internal and external is fractal, because on 15-minute, external is going to be different than the hourly. On the hourly, the external is going to be different than the 4-hour. 4 hours, same thing with the daily. So it's all based upon what time frame you're looking at. On the 5-minute, I'd be confident that we come to this high. Why? Because we just took internal. So after taking internal, I'd expect this for the 5-minute. If we don't displace through this low, if we just went boom, boom, pull back, boom, like lower, like that, I'd expect probably lower prices, and at least to take out whatever the higher time frame low is. So after we see that, we head down to the 1-minute. After we're down here on the 1-minute, what do we look for? And I will tell you right now, I took a short to target this low. Why? Because on the minute chart, price is fractal. So time on the charts are fractal. We take an internal high. What can I expect for the 5-minute to retrace to a bullish PD array? Look, we have a 5-minute fair value gap right here. I took this. Oh, I have the screenshot. I can literally show you that I took a short here. Look, we have internal fair value gap. So what do I look for? A retracement to that fair value gap. What do? I see a 1-minute fair value gap after taking out an internal high. Okay, we closed below it. I shorted right there on that candle. I shorted. What did I target? Here. Let me show you that I took this trade. Trades, winning trades. Friday. Oh wait, I did not send it in here yet. Let me send it so I can open it in the browser. Oh wait, I sent it to this guy. Here we go. Wait. Come on, bruh. Come on, Hudson. Hurry up, brudda. Here we are. So, right here, I sold at 943. Bought 2 at 912. 943. Oh, okay, so I got in a little late. But, why did I sell there? Saw that we were respecting it as an inverse. What can I expect? this low on the 1 minute. Why wouldn't I target this low? Because we're trading on the 1 minute time frame. That's where so many people mess up. So many people mess up because whenever we're trading on these 1 minute charts, we're looking for 80 point. Is that 80? No, that's 60 point move. If I was trading on the 5 minute, I wouldn't even have taken this short. Why? Because actually I was trading the 5 minute for a while. So we take this high. Doesn't look like we're displacing above it. But there's nothing telling me that we're going to come sweep this low on the 5 minute. We have this bullish fair value gap. Also, this inverse fair value gap where in a discount of the range. Even this range in a discount. So we move from premium to discount all the time. Highs the lows, imbalances the lows, imbalances the highs, lows the imbalances. That's all we're doing with price. So as I see that we disrespect this imbalance and I'm very confident we come to that low. Therefore, I took a short. And look at that. I bought right after. Why? We have a bearish fair value gap. Also, overlapping time frames, I just noticed we came into this 5 minute fair value gap. So if we were respecting this 5 minute fair value gap, we should at least come to this high. Going down to the 1 minute, where I take my entries off of, I see we respect or disrespect this bearish fair value gap. What can I expect? This fucking high. Stop making it so complicated. Whenever we get down on these smaller time frames, this is what I struggled with for a while, but then I switched to the 5 minute for over a month and a half and realized this is all price is doing. High to internal, internal to external. External, we displace above it, so we're not looking for shorts. This is the first opportunity right, no, not even right here. Actually, I took a short here. I forgot. I did take a short here because we had a 2 minute breaker here with a fair value gap. So I thought we should at least come to this low. We didn't. I bought back as soon as this candle closed. So 992. I got out for 10 points. But then we sweep internal highs, and then we sweep this high. Okay, now we get in. Wow, what am I saying? Now we are getting our a chance to short. So what do we look for? Okay, so ES did go to those standard deviations, but let's take a look here. We come up to this -2, -2.5 standard deviation. Reversal and retracements happen at the -2, -2.5 standard deviation. Take a look. This is the first time that we take these highs. Now we can measure this. What can we expect? Maybe to come into this fair value gap. Probably to come to this low as well, because we're getting displacement lower. So you take the fair value gap. Even if we close above it, you're risking off these highs because we just came into this zone. And, I mean, look at that. We ripped, so it's due for a retracement or a reversal. Short, look at that. I wasn't at the monitors at this time, but if you are familiar with these, don't worry, I'll make a video on it. You could have caught this. Failed swing high, displacement lower. Displacement is fair value gaps. Fair value gaps are displacement. We short, we go lower. This is what price does. This is all that price does. So once you understand that price moves from external to internal, internal to external, lows the imbalances, lows the highs, highs the imbalances, imbalances the highs, you will begin to understand that once we take out this low right here, we probably can expect that high. Oh look, we don't hit it. So what? It's, what time even is that? Oh, it's 10. This just looks like a chop fest. That doesn't look fun. But once you begin to understand this is all price does. You can begin to understand ICT concepts. It's quite simply that simple. But other than that, I hope you guys start to understand how we are finding draws on liquidity, how we are finding imbalances to trade off of, because we want to be trading things that are in a premium or a discount. So a premium is above 50% of the dealing range, discount is below 50% of the dealing range. We only short above discount and above midnight open. We only buy below discount and above or below 50% in a discount or below midnight open. If you do that, your win rate will probably skyrocket. Other than that, I hope this is 40 minutes. I was not expecting to go on for this long, but I'm out of here. I'll see you guys tomorrow. Good luck trading this week and kill it. Stay patient, stay disciplined, and let's get after it, baby. Peace.